Nasdaq is still within a strong rising trend, but a possible head and shoulder formation is starting to show up. What happens if it gets identified? How much will Nasdaq fall? Well, you have to stay tuned. Listening to the StockInvest.us podcast Trading Tips with Jim as we head into week 43. Last week I told you I thought it would be a volatile week, the week we just are leaving. And a volatile week it has been. Markets going up and down during intraday exactly as expected, and many of you probably were able to catch in on some good trades, following the patterns where you buy low and sell high and stay away until next day. This is supposed to be continued volatile markets. I mean, you can expect a lot of them. My bet last week was that markets would either go up very good or go down very hard. It would be nothing in between. It is Friday, markets haven't opened yet. So far this week, Nasdaq is up 1.6%, Dow Jones is up 1%, and S&P 500 is up 1.2%. The futures are showing a possible red market today, meaning that it might be I'm wrong, that market just week over week went sideways. But I believe it was yesterday and the day before markets also started on a red note just to go green by the end of the day, and I think it is the same thing that will happen. I still stay firm that the week will end green. We will know in just a few hours. But this week is coming to an end. Most of you will be listening to this podcast on a Sunday, I believe, Saturday or Sunday, as we will head into the new week, which will be week 43. The week ahead will be full of quarter results. There will be some economic numbers and other things, and we will talk with AI to know more about what will be in the week ahead. But first, before doing that, the signals, which is a very, very good indicator of what awaits ahead, shows that among the many thousands of stocks that we analyze at StockInvest.us, it's close to 70,000 stocks right now, tickers, 32% is giving buy signals. It was 24% last week, meaning that across all Europe, across US, across Asia, buy signals has been growing. It was a good week for many stocks. Nasdaq got up from 12 to 16. New York Stock Exchange from 16 to 23. London was the biggest mover, up to 36% from only 7% last week. And we can continue down the list, but all of them shows a slight uptick from last week. This indicates that many of the stocks are going up, but markets are shaking, and some of the bigger stocks like Nvidia, like Tesla, and some of these have had some hard days, bringing the market a little bit down. But the general picture is that most stocks actually goes up, and I believe that will continue. Last week, or the week that we are leaving, was a week where tariffs again was in the wind, causing the markets a little bit up and down. As just as expected, on Monday was a calm relief from Trump, causing markets to go green. 2 days later, again, tension markets wobbling up and down during the week, and this is expected to continue. But if you look at the bigger picture, we can clearly see that the 10-year Treasury yield, for instance, is going down from first time in a very, very long time. It's under 4. When this number goes down, markets usually continues upwards. Gold, which is a hedge against market, continues to rally. $4,358 when I last checked it just a few minutes ago. Way above any target I had for gold. I didn't think it will push that harder. Personally, I thought that no, it could at least pass 3,500, which was my target. But the way it's pushing now is, in my opinion, too way hard. There is a crash coming in gold, and I think it is imminent anytime soon. But these things can prolong, and gold can go to 5,000. You have no guarantee for nothing. But everything tells me that it's been pushing way too high. 8 or 9 weeks straight up for gold. Silver as well. Silver is pushing very hard, and expected to push a little longer than gold. Markets are just trying to figure out what happened, and the reason why gold is going up is simply because the interest rate yields are suspected to continue downwards. That is good news for anyone with loans. It's good for the economy, and oil is also continuing down. Last I checked, oil, we're sitting at $57, and that is just good news for Europe, especially Europe, also US. These things will really start to show up. It keeps inflation pressure under control and give even less argument to keep interest rates high. I believe, and I said this many times over, that US will cut interest rates hard. Europe will also have to cut interest rates, but not in the same speed as US will do. Europe will be plagued by inflation for some more time. It's political choices made in Europe that will cause these things. And countries like Germany is really struggling right now. Even France having the same things. But again, low energy prices, they will pave way for new economic growth. That will come, but it will take some time. How can you use this as an investor? Well, first off, maybe you shouldn't invest into oil companies. But oil freight companies will do very good. Then you just have to think which companies, if oil continues downwards, which companies will do good. We know that the economy should start to ease up, where it's been under pressure due to high energy prices should start to ease up. And flights, cruise lines are typical things that when oil price go down, have a good time, given that the rest of the economy already follows. So to me, all these things indicate that there might still be some struggle. We have to remember we come from 4 years. We are paying the price for 4 previous years, pushing energy prices sky high, causing inflation all over the board. These things are slowly finding their way back to natural, but there is this delayed pain. People used all their savings, and many are way behind on most things. It will take time for things to pick up, but that is usually the time where you should start to invest into what you think will be the next trend, trying to get it a little cheap if possible. Anything using energy will, in my opinion, be strong, good places to be ahead. Oil companies, as I said, not so much. So oil will typically, in my opinion, be good if we get real low oil prices and we start to see this hurt the major oil companies. I will do like I did last time it happened, go into oil companies again. But now, personally, I stay into transports, and they pay very nice dividends. 8 minutes into the podcast, we will talk a little bit AI, because I'm tired of my own voice, and you should probably be as well. This marks the 6th season of this podcast series, where I tell you what I think will happen in the week ahead, trying to prepare you a little bit and hopefully give you some insights. At the end of the podcast, I show the $1,000 challenge, where I try to grow $1,000 as fast as I can. And currently, that has been a good ride. We'll get back to that shortly. But first, let's talk with AI and get some insights into what awaits for the week. And if you want to try to do this yourself, do understand that I have already fed the AI with a lot of information, preparing it for this. So if you do this yourself, in this example I will use ChatGPT, You probably will not get the same answers as I will get. Anyway, you should use AI for what it's worth. It's a beautiful tool. Are you awake, Gaia?
I'm here and ready to go. If you need anything else, just say the word.
Yeah, right now you are on the air on my podcast Trading Tips with Jim. And I want you to tell us what are the economic events coming up this week?
Oh, fantastic. Well, thanks for having me on Trading Tips with Jim. So this week, we've got quite a few economic events lined up. For example, on Monday, there's the US CB leading index and a couple of T-bill auctions. Then as we go into midweek, we have mortgage data, crude oil inventory reports, and initial job.
Let me stop you there. So you say that on Monday there will be some CPI and inventory numbers. So how does this affect the market? How can any trader use this sort of information?
Absolutely. That's a great question. So when we talk about things like the leading index on Monday or even the CPI data later in the week, traders are really looking at these to gauge the overall economic momentum. For example, if the leading index shows a bigger decline than expected, it might signal a slowdown, which can lead to more cautious trading or even some selling pressure. And when it comes to inventory numbers like crude oil stocks, those can affect commodity prices and sectors like energy. So traders basically use this info to anticipate market moves, adjust their positions, and make informed decisions. In short, it's all about staying ahead of the curve.
Sure. And what is so important about 3 and 6 month bills auctions?
Yeah, definitely a good point to bring up. So the 3-month and 6-month T-bill auctions are actually pretty important because they give traders and investors a sense of short-term interest rates and overall demand for government debt. Essentially, they're a gauge of market sentiment. If investors are piling into short-term T-bills, it might mean they're looking for safety, maybe because they're uncertain about the longer-term outlook. On the other hand, if demand is lower, it could mean people are feeling more confident and moving into riskier assets. So traders watch these auctions as a kind of pulse check on market confidence and interest rate trends.
And the US has a great debt along with most of EU countries and EU itself. Does the 3 and the 6 month bill auction affect these things?
Yeah, absolutely. It's all interconnected. So when we talk about a country having a lot of debt, like the US or many EU nations, short-term T-bill auctions kind of act as a litmus test for how easily the government can finance that debt in the short term. If there's strong demand and the auction goes smoothly, it suggests investors are still confident in that country's ability to manage its debt, even if it's high. On the flip side, if these auctions start showing weak demand or higher yields, it can signal that the market's getting a little nervous about that country's debt load and the cost of borrowing might go up. So in a nutshell, these auctions give a quick snapshot of how comfortable investors are with that debt, and that ripples out into the broader financial picture.
Do you have any information on how these auctions been lately?
Sure. So lately, these T-bill auctions have been pretty stable. For example, the 3-month bills were yielding around 3.86% to 3.85% recently, and the 6-month bills were right around 3.845%. In other words, they've been pretty consistent, and that suggests there's a steady demand and not too much market jitters around them right now.
No, thank you. I hope most users did understand what the AI said. There are some things that you should pay attention to. The T-bill will show a little bit about debt handling in the future. That is very, very important because right now US is using way too much money paying off debt, and that goes for a lot of others as well. Crude inventory, very, very important for anyone trading anything oil related, etc. But let's continue with the week, Gaia.
Absolutely, Jim, and you summed it up nicely. It's really about reading those signals and understanding how those numbers can hint at broader trends. So let's definitely keep going with the rest of the week. You've got more economic events like jobless claims coming up, and of course, all those earnings reports that we touched on earlier in the week. Let's dive in.
Sure. But if we try to summarize the most important economic events that the stock trader should be aware of next week, which are these and how do you think they will affect the stock market?
Yeah, absolutely. Let's sum it up. So the big ones to keep an eye on next week for stock traders are going to be the CPI data, because any sign of inflation ticking up or cooling down can definitely sway market sentiment. Then we've got those jobless claims numbers, which are always a good barometer for how the labor market's doing, and that feeds into economic confidence. And then, of course, we have the T-bill auctions, which we've talked about, just a quick gauge of short-term interest rates and debt sentiment. In terms of impact, if inflation comes in higher than expected, that might spook the markets a bit and lead to some volatility because it could affect rate cut expectations. On the other hand, if jobless claims are stable or better than expected, that could give the market a little bit of a boost. Overall, traders will be piecing these clues together to figure out if the Fed's likely to cut rates soon or not, and that can definitely sway the stock market's direction.
Thank you. While you are at it, please check the weekly financial news and give a little insight from this.
Of course. So diving into the weekly financial news that we touched on earlier, there's a few key takeaways. One is that global markets are pretty jittery right now, especially with the ongoing U.S.-China trade tensions and a bit of a banking scare in the U.S. That's making investors a bit more cautious and driving them towards safe haven assets like gold. On the flip side, there's still some bright spots like Malaysia's economy doing pretty well and strong earnings from some major U.S. banks. But overall, the geopolitical and economic uncertainty is definitely keeping traders on their toes. In short, it's a mix of caution and a few pockets of optimism, but traders are going to want to stay alert.
So AI just says the same which I've been saying. Right now, it's all about geopolitics. But last week I told you that the quarter season is again rolling up. A lot of big banks are coming in, and this can, of course, set the longer tone. And a new week will come, and there will be new quarter results. And Gaia, which are the quarter results that the users should watch out for? Give us a quick overview of the biggest companies releasing quarters the following week.
Absolutely, Jim. So yeah, earnings season is definitely a big theme, and there are some heavy hitters reporting this coming week that everyone should keep an eye on. For instance, early in the week, we've got Netflix reporting, and they're always a big bellwether for the tech and streaming sectors. Then you've got names like GE Aerospace and Coca-Cola rolling out midweek, and those can give us a read on industrials and consumer staples. And then by the time we hit mid to late week, we've got Tesla, IBM, Intel, and a bunch of other big tech and industrial names. Basically, those are going to be the key earnings you watch because they can really set the tone for their sectors and for the market overall. So definitely a busy earnings week ahead.
Sure, but right now there is a lot of listeners sitting wondering, now, which of these quarter results, if any, should I bet on for an upturn? So in your opinion, which of the quarter results coming up have the highest chance of giving a price jump after the quarter results are released?
Yeah, that's the million-dollar question, isn't it? Well, if we had to pick a few names that might have a decent shot at a post-earnings pop, I'd keep an eye on something like Netflix, because strong subscriber growth or a positive outlook on their content could definitely excite investors. Another one might be Tesla, just because it's such a high-profile stock, and any surprise in their earnings or deliveries could move the needle. And then you've got companies like Coca-Cola, which is a bit more stable, but if they have a surprisingly strong quarter, that could also give them a nice little lift. Of course, it's never a sure thing, but those are a few that might have a bit of potential to give traders some excitement.
And if you wonder how much the stock could possibly swing, you can find this at stockinvest.us. Go to the ticker, for instance, Tesla, Netflix, and we will, on the page, you will see a warning. On the warning for the earnings, we will also state how much we expect the stock to swing, up or down, based on the quarter results. And Gaia has been pretty correct about which direction stocks will take after quarter results. Hopefully she will be also this week. The last thing with AI is, of course, how will markets end next week? How will Nasdaq end weeks? And Gaia, check out the chart I gave you and tell me what you think. Just give a short overview of what you see in the chart and tell me how you think Nasdaq will end next week, the next 5 trading days.
Absolutely. Let's dive into that. So looking at the NASDAQ chart you showed me earlier, we can see that the index has been an overall uptrend, but it's definitely pulling back from that upper channel line and testing some support around the longer term moving average. So we've got a little bit of a cautious tone going on. In terms of the next week, it really depends on how those economic data points and earnings come in. But if I had to give a quick take, I'd say the NASDAQ might be a bit choppy with some volatility. We could see it ending the week maybe slightly down or flat if those support levels hold. But if we get some positive surprises in earnings or economic data, it might stabilize and bottom more neutral note. So a bit of a cautious outlook for the next 5 trading days, but we'll see how it plays out.
And with that, we say thank you to Gaia, and you will have my take on the week ahead. I started the podcast saying that Nasdaq is within a rising trend, but there is a possible head and shoulder formation showing up in the chart. And if you don't know what the head and shoulder formation is, you should check it out, because one of the things I absolutely love about technical analysis is patterns. Patterns tend to be very correct. Either it is rectangle formation, if it is double bottoms, double tops, whatever it is, they usually tend to pan out very well. And right now, despite Nasdaq being a very, very strong rising trend, I can see a possible head and shoulder formation, but it is higher chance that Nasdaq will continue within the trend. Right now, what you see in the market is just totally natural. It reached the top of the trend. Now it's going back towards the bottom of the trend. It's very, very close to the bottom of the trend, and usually it tends to just push upwards. The trend is usually your very, very best friend. From a trading perspective, I like to say that, okay, I will give it 70-30, that Nasdaq will continue upwards within the trend. I give it a much higher chance that this will happen than the opposite. If Nasdaq breaks the trend, meaning that it falls under the trend line, I want to see a break. I want to see the break significant enough, either followed by increase in volume, trading volume, that there is an absolutely change in the volume, showing that it is significant enough, and then I just bet on the upper side. If Nasdaq breaks the trend, it has to continue a little bit more down before it is at the bottom of the trend. You can expect it to move one fan down. That the size of the fan is currently 1,000 points, meaning that if it breaks the trend, you should expect a drop to 21,000 points. If the head and shoulder formation comes in, meaning that it is established and it actually looks like a head and shoulder, it will be the height of the head to the bottom line of the neck. In this case, that is roughly around 1,500 points, meaning that in worst case, if these things come in, Nasdaq can take a dive back down to just around 20,000 points, where also will be a lot of support. But I hold trend to be stronger. I think everything we see now is natural, but we don't know how things play out. Still, it is the geopolitical issue, and the pressure in gold just signals that the big investors, the big banks, everyone thinks the same thing, that there is things at stake, and that is why they try to hedge. But still, markets are very, very strong. If and I do this all the time, if I have to guess, I think Nasdaq will push up to 25,000 points. Now it has the natural reaction, which I was speaking about many weeks ago, that it will happen, and why I started to reduce my total exposure in the market. Market is still not there where I see an obvious buying opportunity. If Nasdaq should go down to 20,000 points, you can rest assured that I will put everything I have into the markets again. I do this every time it dips hard, and after collecting a nice profit, I just start to reduce my risk. 25 minutes into the podcast, one thing left is the $1,000 challenge, where I try to grow $1,000 as fast as I can. And what I have done is I have made $1,000 became $4,794. It was up at 5,555, even more, if to be correct, because NEO was about 8, took a dive. Everything is just out of the playbook. This is this is just how you can expect. I told you that if it gets close to 8, it will be a super position to sell. It should probably dive down to 650. Happened, absolutely. And you may ask, so why didn't I sell? Well, because I only do. In this challenge, I only tell you up ahead what I will do before I do it. And I came to the conclusion that it will be a little bit too messy if I use these swing trades. I just told you up ahead, if it gets close to 8, sell, because you can buy in cheaper, accumulate stock. But it would be too confusing if I do that, and later the week after would say that no, I did these flip trades, now the challenge is up at 6,000, 7,000, 8,000, etc. So we just stay steady. NEO currently at $6.81 and struggle right now. The only struggle is the tariff issues, because NEO has absolutely broken the falling trend, and I believe NEO will go very hard. I bet very hard on that in my personal stake. I have a huge stake in NEO, which currently sit at such a nice profit, and I don't feel any scared, because to me the trends are very, very obvious, and I believe it will continue. But quarter results are coming up. We can get new scare. For now, NEO will continue to stay in the portfolio. Given the current markets, I don't see any reason to change. I'm sorry that you're waiting, but if you are not in NEO, I think today's levels hold a good buying opportunity. I believe it was last week or the week before I told you, if you want to get into NEO, I don't think it's a very good opportunity. I think that you will be able to buy it cheaper. Just happened. We are now at levels, and it was down at 650 yesterday or the day before. And I just think that, again, we are at levels where it's a decent fair chance that if you get in at current level, there should be some potential upside. The downside is limited. A little messy podcast there. Not the best, can absolutely feel that. I'm actually very, very tired of doing these podcasts every single week. And a small warning, it might be that it will come to an end, that this will be the final year. I will see what awaits, if there will be some new thing, but I feel things are very, very repetitive, and it's very hard to come up with something new every week. But this is just the name of trading. Why do you want something unique every single day? Because that is usually how you lose money. You jump too fast in and out of positions. Try to figure out the longer trends. Play the trends. I just told you that I think energy will continue down. I've been totally 100% correct. Energy was above 100. I told you. Now I'm selling everything I have in of oil companies, because in my view, given the new administration, etc., oil will just keep pushing downwards. I got out of oil, and I think it will continue even a little bit further down. And I told you, if oil is low, energy price related to oil should be low, meaning that there will be an upside for airline companies. Maybe that is what you should look into. I told you when Biden won the presidency, now just buy war stocks for whatever you can, because that will be what awaits us. Now it is different things. These things have turned out very, very good. For war stocks, it will be the huge dividends in years to come, because everyone is arming up. But the stock upside, the price upside in war stocks is not the same like it was. I see things changing all over. There is new big trends coming up, and I go into them, and I usually stay there. Until next week, just have a super week, and I absolutely hope that your portfolio will be much greener by the end of the week than it was in the beginning. Until next time, bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information you agree and are held liable for your own investment decisions.